South Australia's top marginal land tax rate has been the highest in the country. The state's Liberal government previously announced plans to cut that rate to 2.9% over several years. But in a cabinet meeting on the eve of Parliament's return, a unanimous vote saw the rate slashed to 2.4% in a single move.
92% of mum and dad investors will pay less land tax as a result of the increase in the threshold and the reduction in the top rate. 75% of company groups will pay less land tax as a result.
The catch: the government won't back down on its plan to ban a controversial property tax loophole. It wants to put an end to investors dividing ownership between a sophisticated portfolio of companies and trusts, allowing them to pay little or no tax.
It wipes out the opportunity, which has been occurring for decades in South Australia, for someone to own $3 or $4 million in properties and not pay a single dollar in land tax. It is unfair, it is inequitable, it means that others are picking up the burden in relation to paying land tax.
The loophole crackdown will raise an extra $86 million per year according to government figures, but overall the government will collect $70 million less in land tax revenue because of the lower rate.
You'll have an investment climate which says no stamp duty on commercial property transactions. You'll have a top land tax rate which is the same as the national land tax rate. So South Australia, from our viewpoint, is open for business.
The reforms also include an increase in the tax-free threshold from $391,000 to $450,000. Consultation on the reforms is open until October 2. The government hopes to introduce the reforms to Parliament the following fortnight. The changes would take effect on July 1 next year. Emily Burley, Sky News, Adelaide.